One key thing to also look out for is we're waiting for this to happen in the New York session. Another little tip for you. Price must turn around in this zone. Welcome back, guys. Kalisa here. We've just got to the area we've been waiting for in the weekly time frame. So hopefully next week should be money week. Let's get into it. Last week was pretty much a range, but that's not necessarily a bad sign because we had this doji candle that was left on the price action. So that we're going to get into that in a second. Let's just quickly go over the overall direction and bias and explain why this doji is actually a very good thing. So we already identified that we have in bullish momentum, we have the impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement, okay, and so on and so forth, which is what you will see here. Impulse, retracement, impulse followed by retracement, okay? But it looks like we've created our higher low, and we should be expecting the push up for the higher high. However, we haven't actually finished this. I don't believe we've actually finished this bear move. So reason being, we have weekly and monthly supply down here. Usually we do go back to those. Usually it's a retest of the high as well, which we've completed, but I do have reason to believe that we're actually going to make a second move down again. Let me just quickly get rid of this. So this, as you can see, looks like a impulse, correction, impulse, correction. So this would indicate we're still in bearish momentum. So we're waiting for this area here, which is where we're at now on this weekly doji, to then roll over and create the new low, or possibly come back to the previous low and then turn back around for bullish momentum. All I know is I'm still bearish majorly bearish on this trend. On the weekly time frame, we are also below the 50 EMA. We have also just hit the 50 EMA, as in a doji at the 50 EMA is a good sign that we may have the reversal. We have also just come back to the demand level on the daily / 4 hourly. And actually, just go back, daily / 4 hourly. So we have got more and more confidence showing that there's a very good likely chance we're actually going to turn around from this level. And of course, the pink zone here that you can see, we just missed it, but we're still near a very key level. Okay, so those are the reasons I have why I believe we're still going to be bearish on this. And on the way down, my first targets will of course be the previous low. Second targets will be this high that we broke and we did not retest. And the third targets will be monthly and weekly supply levels. Okay, so that's the idea. Daily time frame. Let's skip down. This won't be too long, guys, because it's pretty nice and clear and simple. So as I mentioned before, we're in bearish momentum, impulse, retracement, impulse, retracement. We can also confirm this being a retracement, or not necessarily confirm, but we can look at volume. Whenever you look at volume profiles, you can always see how the market is moving. Look at the size and the volume of these bear candles, and look at the size and the volume of these bull candles coming back up. Usually we have smaller bear candles and bigger bull candles when we're in bullish territory, which again gives me another confirmation that or indication that we may be turning around. We've also had price come back up to this level that we just said, the previous demand, the previous supply level, and we've had these candles just ranging. We've pushed up, doji candle, come back down, push back up again, wick rejection from our key level, and we've got another daily doji. So again, this is giving me corrective price movement. If we go down to the 4 hourly now, we can talk about that. This is corrective price movement. Price is going up, reversing, going up. It doesn't really go that far up, corrects heavily. It doesn't go that far up, correct. It doesn't go that far up, correct. So this is corrective price movement when price is not moving with intent. When price is moving on the Dow with bullish intent, this is what it looks like. This is bullish intent, okay? This is not bullish intent. This is actually volume slowdown. Price is slowing down as it's reaching a key level. As you already know, once price is moving and it has intent, when it starts to slow down, there's a very good likely chance that we're actually going to reverse, okay? So all these factors are, in my mind, giving me the idea that we are definitely still bearish, and this is the area I'm waiting for to see that we can actually have that turnaround, okay? We're on the 4 hour time frame right now. So what would we be looking for on the 4 hour? Because first we've had this initial push up, retracement. We went over this 2 weeks ago, that this was not confirmed until we broke it. We broke the high, came back down, and we rested on these lows here. We didn't break the lows. Pushed back up into corrective price structure, retracement again held the lows, This is the low confirmed because this was the low and this was the leg up, the push up. So this is it's come back to the low, so it has not broken these lows yet. Push back up again. So this is all the real estate that Dow still has to retrace into, and it can still be bullish. Okay. Also, what have we seen on the 4-hour most previous candles? If we just zoom in, we can see that price has pushed back up with much more bullish intent than on these bear candles. We've had the retracement, we've continued back up with intent as well, though the wick rejections here may have confused a few people, but still with intent. Then we had this big bear candle on these highs. We then were followed by another big bull candle with a big rejection. The bear candle that came in was not a bearish engulfing, and it was less volume than the bull candle previously. We then had this small retracement and then another leg down. But again, we're holding that low. If we just quickly hold that, it's a little support level on the 1 hour. So we've been holding this. We haven't had the volume switch I always talk about. The volume switch would be, these candles are much bigger, bull candles. We'll have a big bear candle or bearish engulfing, and then we can have smaller bull candles, try and retest getting back up to those highs, which fails. We then have bigger bear candles or more sell volume coming in again to confirm that we've turned around. That's the kind of thing we're looking for. If price happens to just stick around here and then just roll kind of directly below this level here, this pink zone here, then I'll be looking for a retracement. Though I doubt price is just going to drop slowly like this and just start dropping down. One key thing to also look out for is we're waiting for this to happen in the New York session. Another little tip for you. Price must turn around in this zone in the New York session, as this one did here. You can see this was during the New York session. So New York brought it back up to the key level. New York is the one that has to take us back down. So I'm guessing that on Monday, we might have some price consolidation, or we might have a push up, we might have a little retracement. But what I do know is New York needs to push into here, whether Monday, Tuesday, Wednesday, Thursday, or Friday, push us in there and then turn us all the way back around. Or another session like London could push us in there, or New York or Tokyo could push us in there. Then London can dilly-dally. Then New York can spike up. But as long as we're in New York in this area, New York has to take us away from that area, which again will be a good indication that we've turned back around, followed by the volume switch. So that's literally what I'm looking for, guys. I hope that was simple enough. Let's quickly go down to the 1 hour. This is the level I was talking about. So we've had impulse, correction into these lows, impulse, correction. But this correction seemed more like an impulse because this was a small correction and then another impulse down here. The reason why they say this is a correction is because even though its volume has come down very quickly, it's still not as fast as these two candles. If I quickly draw out this level here, this is the level we're holding. You can see that we've had the impulse, correction, impulse, correction, impulse, correction. This is still a correction because even though this looks like it came down very quickly, it was then followed by the smaller correction and then the impulse down. Price has then broken below this level and then broken straight back above it with this bull candle. And now we're kind of hovering just above it on a retracement on a lower time frame. But again, just look at the volume, look at the size of this bullish candle and followed by the second candle. That was 2 candles. Look at the time it takes. It took 1, 2, 3, 4, 5, 6, 7 candles to bring price way back down. So that would still be classed as a correction, okay? So as I mentioned, we're waiting for price to push back up, New York to hopefully bring us back down with bearish intent. We want big bearish volume candles like this. You can see before we broke these lows here, very good example. You can see price came down, impulse, correction, impulse, correction, impulse. This is the correction. We had the impulse to finish this retracement leg. And look at the volume candle. So bears came in, couldn't quite take it all the way back down. We had the test that bulls tried to test it again. Can we close back above? No, we cannot. Bulls came all the way back up. Sellers came in heavily and rejected this area. And look at the size of these bear candles, 1 and 2. And this, of course, showed the continuation of that leg. Okay, so we need to have big volume candles to the bear side to indicate that reversal. So yeah, so let me just quickly point this out. On the monthly time frame, you can see that whenever we have pushes up, when we break new all-time highs, we usually come back down to those where price moved away from. So you can see this monthly candle. Can you see that when this monthly candle pushed above this whole level and took off, the retracement leg, i.e. this, where we had this big reversal when the world was going into a crazy frenzy back then in 2020, you can see that price wicked and went straight back into that supply level. price came back down here. The monthly that took us above those the previous high, price came back down and didn't just stop at the retest, but it came back down straight to that monthly demand level. Okay, this is the reason why we're looking for price to come all the way back down into that demand level. So that's why we're waiting for this to be a second leg all the way down. Okay. From now on, I'm going to be giving out some more tips on how the Dow Jones moves. They're going to be listed out in all the upcoming videos. Things that maybe a lot of people don't really talk about. Make sure you subscribe because you're going to want to see some of this. It's, in my opinion, it's easier to trade the Dow than currencies. So for me, that's why I choose Dow. I mean, for example, one little tip you can see already. Majority of the time, Dow is bullish. You haven't got to be rocket science to figure that one out, but it just goes to show that the bull trend is going to be continuing. And the reason why it continues, the economic factors, we could go through all of that, but it's not the video for that right now. But the bull trades are going to be most probably your most common trades, as you can see, because the trend is usually bullish most of the time. Anyway, catch you again next week, guys. And good luck trading next week.